Hi, I'm Cory Litzenberger from cgltax.ca, and this is Brainstorming Plus Tax. In this special 2019 federal budget episode of Brainstorming Plus Tax, we're going to talk about the Canada Training Credit and how many people won't actually be eligible for it. Now, on March 19, 2019, the federal government tabled its election year budget. One of these new provisions is a refundable credit called the Canada Training Credit. However, the $250 credit won't even be available until you file your 2020 income tax return in April of 2021. Further, if you were born in 1995 or later, you won't qualify yet. If you were born in 1954 or earlier, you would never be eligible. In addition, the maximum benefit you can receive is $5,000 in a lifetime, which will take 20 years to get at the $250 a year. And the benefit can only be used to a maximum of 50% of eligible tuition costs. So let's consider the following scenario. It is 2019, you are 25 years of age, making $27,000 a year. You decide to take advantage of this credit and enroll in your first semester of schooling in the fall of 2023. Now, according to Statistics Canada, the average Canadian undergraduate currently pays $3,419 per semester. So you take time off work to go to school full-time in the fall, thus reducing your income by 1/3 in the year to $18,000. Under the current 2019 rules, you would only have $39 in federal income tax. This amount is low because the tuition credits reduce your taxes. Now, in 2023, you have built up a pool of $250 per year after you turn 26, and believe you have a $1,000 pool available for that year. When you file your 2023 return in April 2024, the $1,000 is triggered as a refundable tax credit, but you won't be getting $961 back. It won't be $1,000 minus the $39 tax owing. You see, here's the catch. The $1,000 pool reduces the amount you can claim for tuition credits as well, which changes the tax owing to $189 of federal income tax, meaning the $1,000 pool that you were waiting for is reduced by 15% by the time it is paid out. Cash in jeans, $811. But what if the course you decided to go to begins in January of 2023? You go for the January to April semester, work from May to August, and attend school from September to December. Using the same $27,000, your income is actually being reduced by 2/3 because you're attending full-time. In this scenario, using the same $27,000 of annual income, the income is reduced by 2/3 when you're attending full-time and not working. Your income then is only $9,000 because of the May to August period that you've worked. Your tuition, possibly paid through student loans, is $6,838 for the year. Your tax is now zero because even before tuition credits, you are below the basic personal amount in your earnings. Does this mean you get the full $1,000? No. Because your income is less than $10,000 in 2023, you don't get the $250 for that year. As such, you only get $750, and your tuition credits available for carry forward are reduced by $750 as well, thus having a future negative impact on tax of $112.50. Your net result is $637.50 cash in jeans. What if you are a parent that decides to stay home with the kids until they are in school full-time and go back to school in 2023? Unfortunately, because you did not make more than $10,000 a year in any of the years, you get zero. What if you were laid off, collecting regular EI benefits, and decide to go back to school? Regular EI benefits don't qualify for the $10,000 income calculation. As a result, unless you had special EI benefits like parental leave or earned income from another source greater than $10,000, you don't qualify. What if you were self-employed through a small business corporation and paid yourself dividends instead of wages, and then decided to upgrade your training? Your dividend income does not qualify, and so you are not eligible for amounts to be added to the pool. But let's assume you do qualify, and you've waited the 4 years to build up a pool of $1,000. Remember that the $1,000 is only a net $850 because of the reduction in tuition credits. That same Stats Canada report says that tuition is increasing at 3.3% per year. That means by you waiting 4 years so you can get the net $850 means your annual tuition has likely increased from the $6,838 to $7,786, an increase of $948. So you've waited 4 years, and the tax amount you receive back won't even cover the inflationary price increase on the tuition. In conclusion, those that do qualify won't see anything until April 2021, and the actual net amount of what they will see is only $212.50. Their annual tuition will likely have increased by $225.65. Not enough to cover it. Students under the age of 25 will see nothing. People over the age of 25 that don't have more than $10,000 of income will see nothing. Seniors will see nothing. Parents looking to re-enter the workforce will see nothing. And people who have been laid off and have less than $10,000 of non-EI income will see nothing. It seems like a lot of work for a lot of nothing. And with that, for CGL Strategic Business and Tax Advisors, I'm Cory Litzenberger. Thanks for listening.